Hey everyone, welcome back to the channel. My name is CJ, and today I want to talk about my top 5 key takeaways from Charlie Munger's recent Q&A session from the annual meeting for the Daily Journal company. The great thing about the Daily Journal annual meeting is that it's sort of like a mini Berkshire Hathaway annual meeting. Charlie's asked a bunch of questions that don't necessarily relate to the Daily Journal. And he offers so much wisdom per word, it's truly impressive. And you can't listen to one of these annual meetings without coming away a little bit wiser. Anyway, there will be timestamps in the description below if you want to jump around to any point in this video. Before we begin, please like the video and subscribe to the channel if you want to keep up to date with investing content like this in the future. Okay, let's dig into my key takeaways. First up, I want to cover a topic that is very near and dear to my heart. Charlie was asked whether or not he thought value investing was still relevant, and he said that the answer was simple. Value investing will never go out of style. He defines value investing as trying to get more value out of something than you pay for it, and that simply will never go out of style. There's a common misconception that value investing is simply looking at dying businesses that have a lot of cash on hand or are trading at low PE multiples. But that isn't value investing. It is, however, one approach to value investing. Some investors look for value in wonderful businesses like Warren and Charlie have found with Coca-Cola and Costco. Other investors seek value in weak or dying companies that maybe have one puff of value left. Both approaches are definitely valid, and both approaches fit under the category of value investing. The commonality between the two approaches is that they both look for more value than they're paying. Investors have to evolve or they'll go extinct. We're looking at financial markets, which are constantly changing, they're very complex, and they're always evolving. In this type of system, it's really hard to predict the future. Great investors like Warren Buffett and Mischief have, over their careers, evolved their investment philosophy and their approach to valuing businesses. So in short, no, value investing is not dead, nor will it ever be. You simply need to get more value than you pay for. Okay, next let's revisit what Charlie had to say about SPACs, Robinhood, and speculative bubbles. Charlie famously has no qualms with making emphatic statements when he believes strongly in something. At age 97, Charlie's been around the block a few times, and whenever he talks about speculative bubbles, I am always listening carefully. Firstly, Charlie believes that SPACs are basically no good. He thinks we'd be better off as a society without SPACs, and he thinks it's a pretty obvious sign of a bubble when people are paying for something when there's not even necessarily an investment or business in place. He doesn't like SPACs, but he says it's pretty much unavoidable because the investment banking industry will sell shit as long as shit can be sold. So that quote right there pretty much sums up his thoughts on SPACs in general. Overall, he says this environment of SPACs and speculative day trading reminds him a lot of the tech bubble in 1999, and he says that it must end badly, he just doesn't know when. Next, let's move on to his opinions about Robinhood. Charlie was asked about the biggest lie being perpetuated by the financial complex, and his answer was commission-free trading. He said it was a great candidate if you wanted to emphasize what disgusting business looks like. One thing that he wanted to make very clear is that commission-free trading is not free. If your broker offers you commission-free trading, then most likely you are the product. I think Charlie held back a little bit here, but he seems to despise Robinhood and the ilk. He said that these brokerages are peddling gambling services, and he thinks selling gambling services to amateur investors where the brokerage makes money off the top is a very dishonorable and dirty way to make money. Because Robinhood makes money from payment for order flow, he thinks it's very likely that they're upcharging their customers and rebranding that as commission-free trading. I would like to explore payment for order flow more in depth, but it does seem like a perverse incentive system that aligns the brokerages and the market makers against the individual retail investors. Later on in the Q&A, he was asked about Bitcoin at $50,000 per coin or a Tesla valuation of $1 trillion. He quoted Samuel Johnson saying, "I can't decide the order of presidency between a flea and a louse." He feels the same way about these two choices. He doesn't know which one's worse. Overall, we're seeing this unsettling combination of greed, leverage, and aggression that's most likely going to blow up in the faces of all the participants. So Charlie's advice on this matter is pretty simple. Just don't get involved at all. Charlie didn't build his wealth by investing in speculative bubbles, and we should all probably learn from his example. Charlie really doesn't mince words when it comes to something that he feels strongly about, and especially when it comes to dishonorable business practices. He's kind of a canary in the coal mine when it comes to bad business dealings. Next, let's talk about low interest rates. Charlie touched on the current low interest rate environment and said that everybody is willing to hold stocks at higher PE ratios and multiples because of how low interest rates are now. And he doesn't think that it's necessarily wrong that these stocks are trading at really high multiples. In this case, he's probably talking about companies like Apple and Google, not Tesla. We can think about interest rates like gravity. The lower the interest rates, the higher the stock valuations will be. The higher the interest rate, the lower the stock valuation goes. If we have high interest rates, There's a risk-free option we have, which is to invest in government-backed securities. Charlie mentioned that he doesn't know what's going to happen in the future with artificially low interest rates or with governments printing a bunch of extra money. The only thing he is sure of is that nobody actually knows what's going to happen. We simply don't know how much government intervention is enough and when they should back down. All in all, this is another example of how, because of uncertainty in future market environments, investors like Warren and Charlie urge us to focus on the microeconomics of a business and pretty much ignore the macroeconomics. If we identify a wonderful business, it's unlikely that the macroeconomic conditions will affect that business very much. Oh, if you're enjoying this video so far, please like the video and subscribe to the channel. I would really appreciate it. Okay, back to Charlie's wisdom. Okay, for me, this is the most important takeaway from Charlie's talk. Decades from now, all this discussion of Bitcoin, Tesla, and Robinhood will be relics of the past, but the lessons that we can learn from these discussions will serve us for our entire lives. Charlie was asked about how he can justify holding BYD even though that the stock price is at nosebleed levels, and his answer really astounded me and impressed me. He answers so casually and so simply, "I don't have a system for how to deal with this, so I'm simply learning as I go along." There's such power in the fact that this was his first response. Charlie is 97 years old, and his first instinct was to say that he's simply still learning. You can tell that he's truly a man who walks the walk when it comes to lifelong learning. He credits a lot of his success to his innate temperament. From an early age, he would recognize good ideas, master them, and then integrate it with the rest of his knowledge so he could use it for the rest of his life. Many people will learn information to memorize it for a test or for a presentation, and then quickly forget it. For most people, a lot of knowledge is just in time, whereas Charlie probably has the deepest well of just-in-case knowledge. And the benefit of this is that it gives him the chance to spot unusual opportunities by combining different ideas from different areas of knowledge. For instance, when he realized it was imperative to understand psychological tendencies, he didn't just memorize them in order to get an A in his psychology class. He learned them so deeply that he was able to integrate it into the rest of the knowledge in his head, and so he can now use it for the rest of his life. And psychological tendencies are one of the most important aspects of learning how to think about business. He also gives a great example of the benefits of lifelong learning with Jerry Salzman, who is the current president and CEO of the Daily Journal Company. Jerry had been working for Charlie by managing the business affairs of his law firm, and even before that, he was managing a mutual fund that Charlie and Rick Guerin had owned. Charlie wanted to put Jerry in charge of running the Daily Journal, even though he had no experience in the newspaper business. Charlie knew that Jerry was going to be able to do it, simply based on his past behavior. Charlie said Jerry didn't know a damn thing about the Daily Journal business when he first hired him, but he did know how to learn what he didn't know, which is of course a very useful thing. He touches on his mental checklists and admits that yes, he still makes mistakes, because investing isn't easy. But he does think that we should learn from him and still use our own mental checklists. He gives a quote from Bunyan's Pilgrim's Progress, which goes, "My sword I leave to him who can wear it." Charlie has provided us with the framework for how to approach investing and life. We should be building a latticework of mental models and checklists in our head so we can try to understand and predict the future and the world around us more accurately. Not everyone will pay attention to these lessons, but if you do, you'll likely succeed in life. Lifelong learning also improves your ability to expand your circle of competence. Charlie mentioned in the Q&A, if you're presented with some technology that you don't understand, you have two options. You either remove your disadvantage by learning the new technology, or you learn to live without that technology. If you have a problem that's fixable, then fix it. But if it's unfixable, then you need to learn to cope with it. What else can you do? One last point about the importance of lifelong learning. Charlie is famous for believing that he has no right to comment about something unless he can state the arguments against his viewpoint better than the people on the other side can. So if you constantly search for disconfirming evidence, you'll be actively removing ignorance from yourself, and you'll be well on your way for your quest for lifelong learning. Finally, this last point isn't going to be a long one, but I wanted to touch on it because I believe it's so powerful. Throughout the talk, Charlie was not afraid to say, "I don't know." Now, obviously, when Charlie knows something, he's more than happy to talk your ear off. But during the Q&A, he said, "I don't know" at least 8 times. That's the epitome of humility in knowledge. He doesn't know when the next speculative bubble will pop. He doesn't know if modern monetary policy is going to work or not. He didn't know the outlooks for the futures of digital payments or banks. He was even asked about using hydrogen versus gasoline in the future, and he just doesn't know the outcome. He's ready and willing to admit when he's in or outside of a circle of competence. He doesn't stray outside of that circle, but he is always actively trying to improve it. Saying "I don't know" is often the best answer an investor can have. You'll keep yourself out of a lot of trouble if you just say "I don't know." It's not shameful if you don't have an opinion on every single thing in this world. In fact, it's totally acceptable if you don't have an opinion on 99% of things in the world. What is bad and what is harmful for you is if you try to act like you have an opinion on something when really you know nothing about it. So I'm going to actively make an effort to use the phrase "I don't know" a lot more. Since you made it this far, and if you enjoyed my key takeaways from Charlie's Q&A session, you might want to check out my video over here where I talk about Mohnish Pabrai's new investing philosophy. If you found this video useful, please like the video and subscribe to the channel if you want to keep up to date with more investing content like this in the future. I really hope you enjoyed my key takeaways from Charlie's talk. There's always so much wisdom to take away from him. Thank you for watching this video all the way to the end. I really appreciate it, and I will see you next time.